The Grinch is here to steal our Christmas gains. Will Bitcoin and crypto continue to rise into the new year, or have we begun a bearish trend? Ethereum fees remain low, US dollar and bond volatility are surging, and US 10-year note yields are up 100 basis points since September. Although the market has given us a nice Christmas bounce, in today's episode, we'll look at the facts and analyze the likelihood this rally continues. Before we begin, ladies and gentlemen, just want to remind you that through the first of the year, all Crypto Trading Academy memberships, annual and monthly, are going to be 30% off. You can use the discount code SANTA, that's S-A-N-T-A, SANTA, at checkout to get 30% off our entire Pathways to Profit coursework, our bottom feeder and Mink strategies, our premium indicator library, our private community, my fully unlocked alpha report every weekday, our weekly mentoring sessions, and much more. You can find all of that at our website, crackingcryptocurrency.com, first link in the description. So I want to start off today, ladies and gentlemen, with the US dollar and bond volatility, what we are seeing in those markets. So here on the chart, we have the weekly time frame of the US dollar index, the DXY. You can find this on your trading view. And we've got some concerning things here. We have seen essentially leading into and following from Powell's statements in the FOMC that we got on last Wednesday, that the US dollar index is popping off. Now, I don't want to get too far over my skis here, all right? And we're going to remain just in the realm of technical analysis here for a little bit. But there are some things here that is concerning. One, we established strong support at our 200 weekly moving average, indicating so far at this point that we're not having a reversal in trend. We've had a pretty steep pullback from the uptrend that we entered basically from June of 2021, kind of ending towards the middle of 2023, so to speak. We've basically consolidated for much of 2023 throughout 2024. But now we seem to be potentially breaking out of the range that the dollar index has been in. And this is concerning. Everybody was kind of excited to a degree back in September, when we initially got what we considered to be at that point a very good print from the Fed, very good guidance on the Fed. But what's interesting is the dollar index has quite reversed since then. Now, there are other factors that explain this, of course. Increased global demand for U.S. assets in optimism of a Donald Trump presidency, for example. But specifically with relation to risk on assets, historically, the narrative has been a rising Dixie, typically is a reflection of global demand for safe and stable assets. Unfortunately, since cryptocurrency is still perceived as a high-risk asset, a stronger dollar usually leads to lower demand for Bitcoin and altcoins, with some exceptions that we've seen over the years. If this is the case, and market uncertainty is the key factor here, investors may also begin to liquidate their crypto holdings to park it somewhere safer, for example, the US dollar. Also, it's important to note that dollar volatility, whether up or down, creates uncertainty in the market. This has the effect of pushing both institutional and, later down the line, retail investors towards more risk-off positions. Institutional investors, of course, at a point where they can save their capital, their profits, and retail investors usually not until they're down about 50%, unfortunately. Now, we can see this expanding volatility in the form of the Bollinger Bands, for example. We can see the expansion of the Bollinger Bands as we are moving towards a potential breakout of the range that the Dixie has been in for quite some time. We can see that so far the market has essentially shrugged off our first entry into our overbought territory, pulling back briefly for about a week, consolidating, and now pushing up and attempting to break new highs. We are entering into warm territory as per the CM Laguerre here, but again, we can just go look at basically where the entire Dixie was throughout all of its, pretty immaculate run throughout 2022. And we can see that the Dixie does not really care about being overbought whatsoever. It's not traded in that way. This is just an index, and it's important to note. Now, right alongside of this, I want to be looking at the US 10-year. All right, this is US 10Y on TradingView if you want to follow along. This is the 10-year note. So this right here, it's important to understand that this is the benchmark for risk-free returns. With bond yields rising, that indicates bonds as an attractive and safe alternative for investors that are seeking risk-free return, essentially. With market uncertainty, and again, rising bond yields are generally a reflection of market uncertainty, investors start to shift capital away from more speculative investments, and they park it into bonds for a higher yield at much, much lower risk, considered almost no risk. Also, this increased bond volatility, and we can see that from the expansion of the Bollinger Bands here. Let's just get bottom feeder turned off here for a second, because it is, of course, firing an up signal here. Again, moving towards resistance. Not the same breakout that we're seeing on the Dixie, but as we can see here, again, momentum turning up to the upside on the weekly time frame, nowhere near in any sort of overbought territory. You've kind of been in this long consolidation. This increased bond volatility is historically linked to shifting expectations from the central bank, particularly around the topic of interest rates. And as we have demonstrated on this channel, Bitcoin's boom phases during this current cycle have been particularly linked to sentiment around the Fed's interest rate decisions. As the market, for the very first time now, not for the first time ever, but for the first time in recent history, is now beginning to price in the possibility of interest rate hikes in 2025, perhaps completely political as direct defiance to Donald Trump's agenda. This also might negatively impact crypto valuations. It's important to understand that high bond yields and volatility also have the effect of pulling liquidity, reducing, kind of sloshing liquidity in the financial markets. And this liquidity tightening can have disastrous effects on crypto, as we saw with the collapse of Silvergate, Signature Bank, and Silicon Valley Bank in March of 2023. I want to turn now to the troubling topic, in addition, of the trend in Ethereum transaction fees. And Ethereum fees, as we can see from Glassnode here, are trending down. These are total transaction fees. All right. We can obviously see the massive boom and bullish trend that we experienced basically during the 2020-2021 cycle. And they were even elevated throughout periods of 2022 as well. Had a little bit of a rally into 2023, and then obviously moving into early 2024 as well. But ever since then, even though price has gone up, Ethereum fees have been trending down. There are some more positive or optimistic explanations for this. For example, that we are seeing actually a lot of transaction fees and settlements, not settlement, but transaction fees being migrated to layer 2s, for example. But this is still concerning for the future, the long-term future of Ethereum's price. Gas fees are a direct measurement of demand for Ethereum block space. And with fees trending down, it signals that fewer users are competing to use the network. Remember, Ethereum thrives on providing a lot of utility across DeFi and other use cases. In addition, since the introduction of EIP 1559, a portion of every transaction fee is burned or removed from circulation. If Ethereum's network usage is high, lots of tokens are being burned, which creates deflationary pressure on Ethereum's supply, which is probably the strongest fundamental catalyst for its price appreciation narrative, naturally leading to higher prices. If, as we see, fees are trending down and continuing to trend down, despite being in a bit of a bull market rally with price, the amount of Ethereum being burned decreases. This weakens that deflationary dynamic, which reduces, as I said earlier, one of the key drivers of Ethereum's price appreciation. If there's not strong burning to counteract the new issuance of Ethereum, which currently in a proof of stake system is staking rewards, that's how the supply has grown, the circulating supply may continue to grow unchecked, which adds downwards pressure on price because there's not enough burning to kind of counteract that. All right, let's do our macro check-in here. Obviously, we can see as far as Bitcoin's cycle, we are still smack dab at the 50th percentile right now. A brief poke into the euphoria phase that I remember, you know, it's funny, I remember us talking about this back in March, like a brief tiny little poke. Obviously, we had a more extended stay in the euphoria phase of the market cycle, and now we are just consolidating at that 50th percentile. Long-term visions here, ladies and gentlemen, a big picture. We are not at the cycle top. None of the metrics indicate that. We have not spent enough time in the euphoria phase, unless this is going to be the most left-handed cycle of all time. As far as our MVRV ratio to previous market highs, not even close. This is this metric in the top, in the middle on the top here. ASOPR is down. All right, ASOPR is down, but I just looked at adjusted SOPR earlier on Glassnode, slightly more updated than what TradingView gives us, and that was actually pretty positive. So the main metrics I want to focus on today is, of course, going to be stablecoin dominance, because this is a bit concerning. We, of course, did find stablecoin dominance finding support around 5%. All right, this is also where we found support in March of 2024, which began the summer doldrums. So we basically had this nice run up starting in March and basically run up in stablecoin dominance, run down, or the summer doldrums that we experienced over the summer from March basically until September, when we got that good pivot from the Fed and good guidance. We got that first rate cut in September. And again, additionally, when we look at the macro here, it was in March when, although rate cuts were announced by the Fed, we didn't get any clear guidance on when they would occur. All right. Uncertainty in the market. So again, we entered into the summer doldrums. Then we got clear guidance on exactly when rate cuts would come. We got our first rate cut in September, followed by the election of President Trump in November. And that, of course, helped accelerate this last little bit of the bull market cycle, causing stablecoin dominance to come down. But we have found support there again at that 5% mark, consolidated for a little bit, and concerningly are now breaking out. This pattern right here on your chart that you see is a break, pullback, retest so far, and it does look like stablecoin dominance is going to want to move back up closer to our 200-week moving average. Now, it's still very early. Lots of things could happen. This could just completely reverse and move to the downside. We could have this kind of last thrust, which I do believe is common knowledge among the market, that we are going to have altcoin season in December to February of late Q4, right? Moving into the last couple of weeks of December, the last week of December now, or very early, Q1 2025. And, while I want to be very optimistic about that, simultaneously, when something is common knowledge, like everybody on Crypto X is talking about this as if it's just a for sure thing that this is going to happen, that makes me kind of speculative that it's not going to happen, or if it is going to happen, not the way that it is. If there's one thing I've learned in cryptocurrency, it's that there are certainly times to be with the herd, but it's also kind of in those periods where everybody is absolutely saying the same thing, that you want to be careful. At the end of the day, you have to own your own P&L. Now, looking at Bitcoin plus stablecoin dominance, basically exactly what I expected has so far played out. I know that this drawing is to the right of price action, but I made this drawing back over here. We were trading, obviously, in an ascending channel. We broke down from that ascending channel in November following the election of Donald Trump, leading to a little bit of an altcoin season. This is altcoin season. When we see this metric move down, it is altcoin season. And we have seen a very sharp reversal of that. That, of course, is the sell-off that we've had. And so we did have 1, 2, 3 days basically of improved altcoin price performance relative to Bitcoin. But now we do see the market kind of slowly, casually grazing back up. Now, if the altcoin season narrative is going to take hold, if altcoins are going to rebound, continue to rebound very strongly from this metric does not need to make a higher high. We need this very definitive wick to be defended. We need to see this metric beginning to go down. We need to see rejection from approximately this 200 moving average area and start to make lower lows. Unfortunately, we've made a higher high. We've made a higher high and we've made 2 higher lows so far. So another higher high would be very concerning and would mean more pain for altcoins. If, however, we do see that this level of resistance is respected, if we do start to see rejection over the next couple of days and start to see the market make a new low in this metric, then I would continue to advise holding altcoins and to have a little bit of faith that we will be getting that altcoin season moving into Q1 2025. We can strengthen this thesis as well with the others relative to Bitcoin USD chart. So this is the price performance of altcoins relative to the price of Bitcoin, excluding Ethereum, BNB, and XRP, I do believe. So what we've seen so far is that if we zoom out, we can see that we are trading in a descending channel. We rallied from about the 50% way mark of that channel, so we didn't go all the way down to the bottom after this rejection. We did retest, unfortunately, for a lower high, the diagonal resistance line of this level, and we came back down and so far found support at the 200 MA. This is exactly what I said last Friday when my strategy began firing reversal signals on the daily time frame for this metric. But so far, this has just been another lower high. This is our second lower high after one lower low. All right. So we do have, as far as market structure here, a bit of a bearish trend. The concerning thing, what I want to see is I want to see the 200 MA respected on this metric, and I want to see us pretty quickly, like over the next couple of days, move and go to break this level. A break of this level, and it's probably risk on for altcoins, at least for a retest of this channel, if not altcoin season, which would be a strong breakout of this level. Ladies and gentlemen, quick reminder that there is still time There is still time. There is 1 day left in our Christmas season trading competition that we are hosting over on BYDFi. $2,300 prize pool as of the last check. We are distributing 80% of those rewards to the top 5 traders. 20% will be distributed to traders who simply trade over $100 in USDT trading volume. If you're not signed up to BYDFi, you can use the second link in the description. That is automatically going to give you 17% off your trading fees with a VIP level 1 advantaged account. BYDFi is hooked up for supporters of this channel. We'll also double your daily withdrawal limit of BTC. Over on BYDFi, you'll have access to over 600 pairs, up to 200x leverage, 0% spot trading fees. And it's KYC free and VPN free, friendly to North Americans and Canadians. So do not let restrictions prevent you from profiting during the bull market. Go join our Christmas season trading competition. And thank you to BYDFi for sponsoring this portion of the video. All right, looking at Bitcoin as we move into Thursday evening, we do see some pretty important things. Let's start off on the daily time frame and work our way down. All right, so we did have a nice bounce from the 50 daily exponential moving average, price pushing up to what I had marked out as our previous support level. Unfortunately, that has now flipped into our current level of resistance. Let's just go ahead and mark that off on the chart. So that level being about 99,776. So we weren't really able to get back above 6 figures. We were not really able to get back above 100,000. Now, I do think that the common knowledge in the market is that we are going to rally to about $104,000, $105,000 or $103,000, $105,000, depending on how you want to split it or cut it. I do think that that is possible. All right. I do think that is possible. The 50 DEMA is very strong. It's very strong support. This is our daily buy zone. So for the believers out there, so for the bulls, this is going to be the area to opening up longs. Overall, this isn't too scary. RSI is now down and kind of a more attractive area to be buying below the 50th percentile. And so that is just a good area to be looking for strength. Now, also to the negative side, we haven't seen RSI down in these levels since, of course, the breakout, or really kind of since the rally began in mid-October, pushing price up to the levels that we're currently at. And then, of course, we really had that acceleration following the election of Trump here on November 6th. So again, overall, as far as the, again, big picture, we can see on the weekly, I guess that might be a little bit more helpful. And I hopefully you deduce this from my cycle chart. It is my analysis that we are not experiencing a cycle top. We might be experiencing a local top. And as I said, kind of the worst case scenario is we get a kind of summer doldrums situation until January, but most likely March of 2025, when we get a dovish pivot from the Fed. And then we can kind of really resume the bull market march to about $200,000. But coming back to the daily, we certainly have to surmise and see that quite a bit of wind has been taken out of the crypto sales over the last week and a half, ever since that disastrous FOMC meeting that is still having ripple effects throughout the market. So far, we have now put in, the way this candle is going to close, this is going to be a lower high. This is going to be a lower high. And worst case scenario, breaks below 92,000 start to look pretty scary because of this weak bounce. Now, it's completely possible that we just see sideways consolidation here for a while and we just range between, let's say, 90,000, of course. So the bottom of our buy range and basically our descending level of resistance. Probably if that happens, the next lower high would be somewhere around 97, 98,000. On the 4-hour time frame, we can see that we have lost the 4-hour momentum. So just as our 4-hour momentum bands were always screaming strong buys from us, while we were maintaining that strong uptrend, we can see the slope of the 200 EMA, the 200 SMA on the 4-hour time frame is beginning to level out, is beginning to average out, and what once was support is beginning to act as resistance. Now, for the bulls out there, I do of course want to point out that on the 4-hour time frame, we are putting in higher lows. We have a higher low here, we have a higher low here. And so it is completely possible that overnight, as we see so many times, we do get the UMA and the APAC markets that come in and pump us up. Key levels to watch, of course, are going to be this 4-hour point of control, which is about 98,482. So for me, I'd be pretty bullish if Bitcoin does not make disastrous lows here. If Bitcoin overnight does begin to move up and we get something like a 30-minute or a 1-hour close above 98,000, I would be pretty bullish, and I would be looking, like I said, for that 103, 105 kind of price target. Here is where where I would want to reevaluate and potentially prepare to get short or get into a safer position if Bitcoin is going to be kind enough to give us that. Unfortunately, it's very possible that Bitcoin will not be kind enough to give us that. So I would be pretty cautious here, guys. All right, pivoting real quickly to Ethereum. Of course, we do still have a weekly uptrend. Price did wick down very close to not only the strong level of support that we have from approximately 2,800 to 3,000. This is also our weekly momentum area, which we are still currently above. Life is relatively good. The RSI on the weekly time frame is still bullish. As far as the daily time frame goes, unfortunately, again, what once was support is now sort of acting as resistance. Still a little too early to really call definitively anything, but of course, we did have a relatively weak bounce and unfortunately a lower high that rejected yet again from that $3,500 level of resistance. So far, still higher lows, but of course, if this is the beginning of a down move, that is not a higher low. Still above the daily 200, the daily 200 simple moving average, but we do have RSI down in the bearish control zone now, unfortunately. So really, again, just key level to watch for here from me is going to be that break of 3,500. And seeing if we do get some kind of support and a higher low above that 32.21, we can really see from the 4-hour time frame pretty much the most definitive signal that we need to see here, which is again just what we saw in Bitcoin, that 4-hour guppy momentum bands. What was once acting as support is now unfortunately acting as resistance. So again, Ethereum as well putting in higher lows here. So we still have the ability, we are at the point of control on the 4-hour time frame. We still have the ability to put in a higher low here and push for that break of 3,500. So again, I wouldn't be overly bearish here. We are returning to the point of control. We are putting in higher lows here. We are grinding up and retesting that level of resistance at 3,500. This could all really change overnight, and this could be a great buying opportunity, especially if we start to see a nice 4-hour close, a nice reversal candlestick pattern here, and price start making that charge back up. But as of right now, we do have a bearish 4-hour trend that has not changed, and so we do need, as I've kind of been consistent on now for the last few posts, we do need to be mitigating our downside risk and protecting ourselves. How the mighty have fallen. Now even the strongest altcoins that were showing strength, even in the face of the rest of the calamitous sell-offs, things like ENA, things like SUI, things like XRP, Ohm, Pepe, Mansell, Deep, Ondo Finance, they are now beginning to show those same signs of weakness. For Pepe is the only coin on this list that of course did kind of get caught up in that massive dump and is below those momentum bands as far as the daily time frame goes. The other assets are just dipping down into the daily bands, but again, starting to lose a little bit of that bullish sentiment as you might be seeing. All right, looking at some of the other top performers, again, things like Radium, Jito, HBAR, Aave, Phantom, of course, and Hype are also beginning to show some signs of weakness, despite Hyperliquid still probably being so far the trade of the season. Our dinosaur coins, they are doing pretty roughly. Avalanche, Polkadot, Ethereum, Cosmos, Stacks, although I'm pretty still bullish on block Stacks. AMP, I'm fully out of AMP. I was just holding on a long bag of that, so you guys know what I mean. And so far, despite a nice little bounce that we had over the course of about 2 days, we're not really seeing sustained strength from our low cap sectors, things like Brett, things like Incentive or Wrap Bitcoin on Pulse Chain, things from like Parcel, Virtuals still showing strength. So I don't want to dog Virtuals too hard, but again, AI agents are of course the narrative. So it is possible that we just see AI agents pump while everything sells off. Now, ladies and gentlemen, before we conclude today's video, with us moving into the end of the year, this is a time that I always like to reflect on my trading performance over the last year. Obviously, right in line with the idea of making New Year's resolutions, this is the time of year that I like to reflect on how profitable I was this year. Did I have a good year? Did I have a bad year? What did I do well this year? What did I do poorly this year? It's also a great time, and this is what I'm currently doing, is I'm making optimizations to my strategy. I'm adding features. I am adjusting numbers. Anything that I feel that has come across in my back testing or my live performance, is there a discrepancy in what I expected from my back test and versus what I experienced in the live trading sessions from my strategies. And so this is that time of the year where I make those adjustments. But I also take this time of the year to reflect on probably the more important aspect of trading, which is the psychological and the emotional. So I want to share with you, and I shared this in my alpha report this morning, but this is going to be relatively unscripted. And so I just want to kind of speak from the heart and talk about 5 key things that continue to provide strength to me as a trader, 5 key things that I always try to keep in my mind as I'm trading. And lessons that I certainly have some great examples from this last year of trading that continue to drive these points home every single year. Every year has its new challenges. Every year has its same situations. But when you really zoom out and you apply, the fundamentals of your trading thesis, your trading strategy to these individual situations, when you look back, you really see that they're all just manifestations of different things that you're supposed to plan for ahead of time. So the first one, and I hope you guys take these lessons to heart. I hope this is helpful to some of you guys. The first one, and my first piece of advice for you in my reflection on the last year, is to own your own P&L. I hear this a lot. I've heard this throughout the years, but I heard a lot of increasement of this year, which is, things like, oh, the market maker's hunting my stop, or, the market's being manipulated, right? Up, down, left, right, sideways, something like that. And the reality is, guys, that it's not true the way you think it is. All right. The market maker is not hunting your stop. That's just where liquidity is. And if you're placing your stop loss where there's resting liquidity, your stop isn't getting hunted. Okay. You just are bad at your entry and stop loss. And so you need to learn from your mistake and you need to adjust. Any market maker, any trader, the market wants to move to liquidity. And anytime you have established lows or established highs, lots of traders logically like to put their stop loss there. And sometimes that works, but sometimes it doesn't. And it doesn't not work because the market maker's hunting your stop or because the exchange knows where your stops are. That's not the way it works. The market went and hunted your stop because there was a lot of resting liquidity there. And that's the game. Okay. Your $2,000 trade is not going to make the market maker's books. They don't care about you. All right. The market is actually pretty efficient. All right. Unless you're trading on there are, of course, smaller rent exchanges that profit off of their clientele. But if you're trading on Kraken, Coinbase, right? If you're trading on a top dog, you're trading ByBit, Binance, whatever, they're not hunting your stops. All right. You just kind of suck at entry and stop loss. All right. So own your P&L. It is not your content creator's fault. It's not the people you follow on X's fault. It's not the Telegram channel you're in's fault that, you aped into a coin that got rugged or that you ran into something that immediately went down. Again, you need to be it's your responsibility, man. It's your portfolio. It's your P&L. It's your money. All right. Nobody else can trade your account for you and nobody else cares as much about your money as you do. So remember that, right? Remember that as you go forward. Do your own analysis, develop your own strategy. That's literally what we specialize in doing in the Crypto Trading Academy. We teach people how to make strategies. Yes, we do things like signals, and I come on here and I tell you what I think the market's going to do. Okay. And I know a lot of you find value in that and a lot of you profit from that, but some of you lose money sometimes. And it is what it is. It's your account. Own it. I own my account. That's how I was able to get to where I am now. I don't rely on anything. Oh, that's not true. I rely on lots of information sources and indicators and all this kind of thing. But at the end of the day, I take responsibility for my account. You don't want to, especially in trading, but in life in general, develop some form of victim mentality, regardless of any real discrimination you may or may not receive. I like to view the world as within my control. I like to view things as my responsibility. When something goes bad, when something goes wrong, I take responsibility for it. I view it as I have somehow contributed to this, not to beat myself up, but what can I do as a man to develop a strategy so that the next time the situation happens, I will do well, or things will go well for the people that I love and like, instead of poorly as they have gone this way. Take responsibility for your life generally, and do not be a victim. Own your own P&L. Own your own account. Number 2 is play to your strengths. Okay. This always happens to people in the academy when we move into a bull market. I'll be working with these people throughout the bear market, and they'll be developing their strategies, and they'll be getting some good results, and they'll be really excited about back testing, and they'll be really excited about automation and strategy and all this and the charts. And then all of a sudden we get into alt season and they read one article where this coin 1000x and they're over here, looking at all these degen shit coins that are 10xing. And all of a sudden, all the work that they did in the strategy room, figuring out how they could actually leave their 9 to 5 and focus on trading, completely goes out the window, and all they want to do is be a degenerate gambler on Solana. That's all they want to do. And 9 times out of 10, They come back and they're like, oh man, I like lost a lot of money. Like, yeah. Imagine that. Holy shnikes. Who could have possibly predicted that going into degenerately gambling, instead of focusing on the thing that you built that works, would work well? All right. There are people out there who are professional degens, who do well in the emerging markets of cryptocurrencies on the edges. All right. The pump.funds, the cookies.funds, all that stuff. Right. And let me tell you, the ones who do really well, it's not an accident. They have a strategy. They worked on it. They refined their strategy. They're really good. They dumped a lot of time into learning how to read blockchain trackers. They put a lot of time into wallet tracking. They put a lot of time into analyzing volume and on-chain metrics. They've developed their own custom strategies that work really well. So if you want to do that, but don't think that you're just going to be able to go on to Solana and make money from the sharks. Those guys are killers, man. Those guys are absolute killers, right? So if you're not a killer and you haven't trained for it, you haven't prepared for it, you don't have a strategy for it, you're degenerately gambling, all right? And it's your fault if you lose money, all right? I advise developing your trading strategy, getting good with your trading strategy in a safer, less risky environment on large assets, top 100 assets. Good at that, okay, which you can do if you put the time in and you put the work in. Okay, you do the back testing, you do the Pine scripting, you do the automation, you'll be making money. Okay, everyone who comes into the academy and does it the right way and follows through makes money. Not saying they become millionaires, but they do the things the right way and the things work. Once you get good at that and your bankroll is large enough, if you then want to slice some profits off to the side that you want to degenerately gamble with, that is the appropriate way to do it. And even better if you actually not just degenerately gamble, you actually build a strategy. That's probably going to be good for you. But play to your strengths, okay? Stick to what you're good at. You got the niches are in the riches, man. You know, if you so many people I try to meet are trying to do this and that and this and that and this and that and this and that. There are a million ways to make money in crypto, a million ways. But you got to pick one and get good at that one and just hammer it to the ground, not to the bone. Don't start getting kind of okay at it and then be like, what's going on over here? No, stay here. Niche down. The riches are in the niches. The riches are in the niches. All right, number 3. Don't compare yourself to others. This is a pretty good one. Obviously, every time we enter into a bull market, we see a lot of just, BS, like bull, thirst trapping, thirst posting on X, social media, Instagram, all that kind of stuff, TikTok, YouTube, whatever, Rumble. Understand that all content creators, even me, okay, you're seeing my highlight reel. All right. I'm showing you the best of me. And obviously I do my live stream every day or, every weekday. So you guys get a peek behind the curtains. It's a little bit more intimate. It's not all, kind of pre-recorded like this, even though I'm speaking from the hip right now, shooting from the hip, speaking from the hip. Oh, you hear me another? Yeah, don't compare yourself with others. You're seeing all these people like, oh, I called this, and I called this, and I called this, and now it's 70x and whatever, man. Who knows if you can even trust those people, right? Most of it's BS. It's engagement farming. And secondly, they're not you, man. They're not you. And you don't have any idea what impact this, to you, what this magical thing that this person has done. Oh, I made like 10x on this. Okay, well, they didn't tell you how much money they put in, and they didn't tell you how much they've actually lost on other things, right? If you got rugged for $100,000 and then you 10x to $1,000, you still lost 80 grand. Okay, 90. Excuse me. Can do math. So don't compare your raw footage to someone else's highlight reel. Trade your own account. This is related to own your own PLL, but just put the blinders on and, all right. 4th thing is fumbling is normal, all right, in crypto, especially in alt season, especially if you're toying around with alts or you got an altcoin portfolio. I read a lot of posts or hear a lot of comments about like, you can't afford to mess this up, and YouTube thumbnails that are like, this is your last chance ever. Listen, that's what they said back in 2017. That's what they said back in 2021. That's what they're going to be saying in 2024. That's what they're going to be saying in 2028. That's what they're going to be saying in 2032. They've been saying about the stock market all the way back to the 1930s. It's all BS, man. Life goes on, right? As long as there's no such thing as like, this is it. It's complete BS, man. Life will go on. The sun will rise again tomorrow. All right. And guess what? Regardless of what happens over the next months, years, weeks, as long as humans are still on the planet Earth, okay, they're going to come together and they're going to be like, all right, we need to make an opportunity, man. Let's pump this market. It's going to happen again. It's going to happen over and over and over and over and over again. It's the nature of markets, okay? It's the nature of markets. So there's always time to do things the right way. There's always time to do what's right, right? It's always the right time to do the right thing, which is get good before you risk a lot of money. And then use your getting good, use your goodness to make money, instead of trying to make money being mediocre and failing and losing money. That's not fun for anybody. It's not fun for you. It'll make you give up. And I'm telling you, Valhalla here is beautiful. All right, when you make it, it's awesome. So fumbling the bag is normal. If you fumbled a life-changing amount of money, that's just called a Tuesday in crypto. All right, it's going to happen. I've done it. Everybody I know who's made it in crypto has done it. We fumbled $1 million bags several times. So just relax. It's okay. You'll have another opportunity. All right. But yes, please try and learn from your mistakes. All right. You don't want to do it too many times. And finally, and I'll close with this, ladies and gentlemen, buy not a grain. You don't need a grain. You need a pillar of salt. I don't know if you can get them on Amazon, but I'm sure you can get one delivered from maybe the quarry, the salt mines, whatever. But you're gonna need a big one, like the ones they have for horses. All right, just get it and set it next to your trading desk, because there is so much, like I said, thirst trapping BS there online. So many people farming for engagements. Just take everything you read, even from me, with a big old grain of salt. All right. So you're gonna need a lot of salt to make it in this market. Be very discerning, be very speculative, overanalyze, do your own analysis on everything. It is the pathway to success, ladies and gentlemen. DYOR, and own your own PLL, and take everything with a grain of salt. All right. With that, ladies and gentlemen, thank you for the rant, for listening to the rant. If you listened all the way to the end of the video, I just want to express such gratitude. This has been such an incredible year for me and cracking cryptocurrency. We've obviously climbed over 24,000 subscribers. We're on track to be over 30,000 by the end of Q1 2025. And it's all because of your guys' support. You know, you guys are the reason I continue to make these videos. You guys are a very positive influence in my life, and I hope that I am equally a positive influence in yours. I will be back to live streaming on Monday, although I will be putting out yet another video tomorrow covering some things that I want to talk about. Just keeping updated with you guys, and my alpha reports are still coming out. Again, just a reminder, all annual and monthly memberships are 30% off until January 1st with discount code SANTA at checkout at krakencryptocurrency.com. Thank you guys so much. If you found value in this video, please like and subscribe. It helps out more than you could possibly imagine. Trade safely, and I'll see you guys tomorrow.